repo market, short for Repurchase Agreement Market, is a financial market where participants can borrow and lend cash in exchange for collateral. The collateral can be anything from government securities to corporate bonds. The borrower agrees to repurchase the collateral at a later date, usually within a day or two, at a slightly higher price than the original sale price. The difference between the sale price and the repurchase price represents the interest earned by the lender. The repo market plays a crucial role in providing liquidity to the financial system. It allows banks and other financial institutions to access short-term funding when they need it. It also provides investors with a way to earn a return on their excess cash while keeping their money relatively safe. Short selling is a trading strategy used by investors to profit from a decline in a stock's price. In a short sale, an investor borrows shares of a stock from a broker and sells them on the open market, hoping to buy them back later at a lower price and return them to the broker, pocketing the difference as profit. Short selling plays an important role in the market by providing liquidity and allowing investors to hedge their bets against potential losses. However, it can also be risky as there is no limit to how much money an investor can lose if they bet wrong on a stock's direction. One of the biggest issues facing the repo market is the problem of shortages. A shortage occurs when there are not enough securities available to meet the demand of borrowers. This can cause interest rates to spike, which can have ripple effects throughout the market. Shortages can occur for a number of reasons. One common cause is when dealers hoard securities in anticipation of future demand. Another cause is when there is a sudden increase in demand for a particular security, which can lead to a shortage if there are not enough available. In some cases, shortages can also be caused by regulatory changes or other external factors. A short squeeze occurs when investors who have shorted a stock are forced to buy shares to cover their positions, causing the stock price to rise rapidly. This can happen when there is unexpected positive news about the company or when there is a sudden surge in demand for the stock. Short squeezes can be very profitable for those who own the stock, but can be devastating for those who are shorting it. Short squeezes can also have a ripple effect on the market as a whole. When a heavily shorted stock experiences a short squeeze, it can cause panic among other short sellers who may rush to cover their positions. This can lead to a domino effect where multiple stocks experience short squeezes, causing chaos in the market. Scott Skyrm, a veteran repo trader and author of the book The Money Noose, believes that the repo market is a crucial part of the financial system. He argues that it provides liquidity to the market and allows for efficient allocation of capital. However, Skyrm also acknowledges the potential risks associated with the repo market. He highlights the issue of counterparty risk, where one party may fail to fulfill their obligations, leading to a domino effect in the market. He also notes that the repo market is vulnerable to shortages and short squeezes, which can have significant impacts on the market. In conclusion, we have explored the repo market and its role in the financial world. We have learned about shorts and short selling, as well as the issue of shortages and how they can lead to short squeezes. It is important to understand these concepts in order to make informed decisions when investing in the market. Scott Skyrm's perspective provided valuable insights into the repo market and its potential risks. While there are certainly challenges, it is also a vital component of the financial system that helps facilitate liquidity and stability. In summary, the repo market is a complex but important aspect of the financial world. Shorts, shortages, and squeezes all play a role in this market, and it is crucial to understand them in order to make informed decisions. Scott Skyrm's perspective adds an important layer of insight to our understanding of this market.